Good morning, Trinidad and Tobago, and welcome once again to the Bourse Report. Today, as I had undertaken last week, we are going to speak about the TTNGL and our recommendation for TTNGL. So let's begin by saying we have a buy recommendation on the stock, and then I will go forward and speak to what is the rationale that has been applied in arriving at this position for this stock. The stock has been out for 1 week, and there are about 2 more weeks to go before the first closing of the additional public offering. So let's look at what's been happening. And we go to our first graph. When you look at our first graph, what you are seeing is that the additional public offering is for an amount of 40 million odd shares. And the price is $21, and the expected amount to be raised is $845,000, which means that the government, through NGC, will retain 25% of the overall shareholding and sell down a further 26% of the 51% that they own. Let us try to simplify our recommendation and look at the rationale. Very clearly, what you are buying into with TTNGL is you are buying a company whose only holding is PPGPL, Phoenix Gas. And basically, Phoenix Gas is in the business of processing from the flow of natural gas in the system. It is processing butane, propane, and natural gas liquids, essentially, natural gasoline. So we look then at the company TTNGL owns 39% of Phoenix Gas. And let's look now at what are the 5 performance drivers that we have been targeting. One is, what is the weighted average NGL price? That is the natural gas liquids. And price and volume make up much of the income of PPNGL. Then what are the volumes that are being processed? Then what is the gas richness? That is how much of these liquids are being extracted from the natural gas flow. What is the export of these NGLs? And then what are the margins being generated by PPGPL? And that constitutes the 39% that will flow through the TTNGL. Okay, let's go next to the other factors. So let's go now to the prices. What has been happening to prices? Well, if we look at it, post-2014, prices have been at low compared to 2014. And in 2017, what you see is that the first quarter of 2017, there has been a very good pickup. This is actually cents per gallon, which is 97.32 cents per gallon on average from the 2015 and 2016 figures. So we've had, since the opening of this particular stock, the listing of this particular stock, some low prices, and in the first quarter going up to 97 cents. So prices on the up. Let's look then at our next graph, which is the question of volumes. Well, in 2014 and 2015, volumes were high at 1.5 BCF, which is the unit, and fell down to 1.32 billion BCF, and was down in the first quarter to just about 1.3 BCF. So it is at the low ebb when we look at it. When we look at gas richness, which is the volume that is extracted per 1,000 cubic feet, gallon per 1,000 cubic feet, what you see is this has been relatively stable, so that you are extracting a certain amount of richness or value from the gas, but in terms of volume, and then your prices have been going up. So let's look at the third driver. And the third driver will be export and production. And you've seen that production has been going down somewhat and has exports have stabilized in the first quarter of 2017 up to this figure that you see here in terms of barrels or thousands of barrels of production. Let's go to the next graph. And this is the fourth driver, which is margins. When you look at what has been happening to margins, margins have been up. Net margins have been up for 2016, 21%, and for 2017, that higher figure. So this is a sort of composite graph which seeks to tell you a few things. The first is that the share of profits for TTNGL has been very good in the first quarter of 2017. In fact, the best since TTNGL went public. As you would see, it has been going up, and that's an important configuration. Then, when you look at the gallons exported, source being the Ministry of Energy, it is up to its highest that has been since the fourth quarter 2015. And so, the next graph that I want to show you is the question of, let me see if I can get my graphs. Okay, so there are several reasons for TTNGL. One, a high dividend yield, which we'll see in a moment. Global stability in terms of energy prices, and that has been a little bit volatile lately, even though there has been an agreement to maintain the cutback in production. Expected recovery in energy production, as you have been hearing, so that would mean volume should go up as we go forward. Earnings in terms of US dollar revenues, this is a US dollar stock. Its earnings and revenues are in US dollars. Maybe US dollar dividends will come out of this particular stock. And finally, the company has an excellent cash pot, about $400 million, which translates into $2.60 per share. Highest dividends yields, we have talked about that the last time, 7.14% relative to the market, which is 3.53%, and on average, as you can see, about twice. Look for us at our website for more information, bourseinvestment.com. Call us on that telephone number that you see here. Have yourself a wonderful investment week. This is Subhash Ramkilawan for the Bourse Report.